This is Craig Haugard with your Financial Issues Ag Update. Corn fought to a draw yesterday as it was squeezed by a drop in ethanol prices. Ethanol futures took another dip as they traded down 11 cents per gallon. To make up for that loss in ethanol margins require corn to fall by 30 cents per bushel. The ethanol industry continues to find itself between a rock and a hard place, with shutdowns seeming to be the best option. Some plants plan to take their spring shutdowns early and then remain idle for an extended period of time rather than continuing to operate at a loss. As I record this, the overnight spot corn futures are trading a half-cent lower. Soybean prices closed over 20 cents higher, driven by panic in China and potential problems in South American ports. Soybean stocks at Chinese ports are at multi-year seasonal low levels, and that fact led to the price of soybean meal in China trading limit up yesterday before closing at its highest level in 4 months. Traders are also keeping an eye on South America, where edicts issued by the Argentinian and Brazilian governments could, but have not yet, disrupted the flow of soybeans. If that were to happen, it would push export business to our shores. Weekly export inspections in the meantime were disappointing as they came in at 21 million bushels. In the overnight trade, spot soybean futures are giving up some of yesterday's gain and trading 7 cents lower as I record this. Chicago and Kansas City wheat futures were right up over 20 cents yesterday as they rallied penny for penny along with European futures. This move pushed hard red winter wheat to a $16 per metric ton premium to Russian wheat, so it's going to hurt us in the export market. Poor exports were certainly on display yesterday as the weekly export inspections came in at 12.8 million bushels. Here in the U.S., for domestic demand, we're seeing a run on flour supplies, which in turn has mills running at full capacity. Coronavirus hoarding is the reason for the sudden increased interest in bread purchases. In the overnight trade, Chicago is a nickel lower, Kansas City is down 3, and Minneapolis is trading 4 cents lower. Cotton futures continue to struggle, with the May futures gapping lower on the open yesterday. Eventually, they closed down 153 points, settling at 52.15, left a gap in the charts between 52.90 and 53.20. In the overnight trade, spot futures are trading 74 cents higher. Livestock futures were all limit up, driven by the strong domestic retail demand as people stay home. The hoarding of foodstuffs by U.S. consumers is creating a great demand for meat packers. Tyson says it's running its facilities at full capacity to keep up and will be able to catch up to demand in about a week or so. The downside could be that high prices or hoarding panics tend to generate long tails of low prices as consumers work through their purchases and in doing so push retail demand into a lull. June livestock live cattle futures were higher. They were up 300 points, while the May feeder cattle futures were $4.50 higher. Lean hog futures joined in the fun, with the May futures closing $3 per hundredweight higher as well. All three contracts will have extended limits in today's trade. Class 3 milk futures were mixed, with the April futures closing 3 points higher to settle at 16.08, while the more deferred months were lower. And cash livestock markets had a huge day as well. Choice beef boxes were $3.50 higher to close at $257.32, while selects were $4.97 higher, closing at $245.14. Pork carcass values were $3.47 higher as they closed at $83.51 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.